All right, guys, welcome back to the channel. Today we're looking at how the plan continues to unfold here. We're watching the 18-year cycle for real estate and the economy in the US, how that's going to unfold with the stock markets, and of course, what's going on with Bitcoin and the altcoin market. So as usual, heaps to get through. Hit the like, subscribe to the channel if you're new here. The agenda for today, we're looking at stock markets resetting as that's happened in the last 24 hours and is in the process of continuing to do so, how that then affects Bitcoin, the 4-year cycle, and as I promised in yesterday's video right here, we're looking at the multi-year bear market, essentially the peaks for Bitcoin and how that can unfold throughout the next 5 years. Interest rates are an interesting one as we continue to see the cuts going back to no cuts, and then also the US dollar and where that currently sits in the overall cycle, as there might be a bit of a short-term bounce on the cards. So I'll kick it off with the 18-year cycle, as you might be new here on the channel, as 1 in 4 of you haven't subscribed yet. But of course, the winner's curse phase is where we sit. Yes, this thing goes on for quite some time. For regular viewers, you might be sick of hearing me talk about this, but I think it's important to keep discussing where we currently sit in the cycle until we get to the point of rolling over. Now, of course, I've been discussing this for several years, and we've gone from the mid-cycle slowdown and the second half, basically where we are now, running into that final peak. Within that final peak, lots of different things happen. One that I've suggested is the interest rates and how generally, as we run into that peak, they try to cut the rates, but typically there's a lot going on in the background that suggests they shouldn't be cutting them. So even if they do cut them, generally the rates will have to go back up leading into the peak of the cycle, because basically prices get a little bit out of hand. Asset prices continue to move up and they've got to do something to slow down the economy. This time, however, this cycle, which of course is the peak we're looking out for roughly 2025, 2026 for real estate and the economy, this peak, there are problems brewing with the bonds market and the yields stemming from the bonds, and that leans onto the US dollar. And of course, this is all showing up in the Bitcoin chart as well, with Bitcoin holding out relatively strong. So maybe this is some sort of safe haven. But in the meantime, the end of the cycle, like 2007, 2005 through to 2007, we saw interest rates get cut. Then they had to rally or rise towards the end of that cycle as well, because basically asset prices got out of hand. And in a short term, we can see that almost every single month, the cut looks like it's going to happen. And then as it gets closer to the next meeting, basically all of those hopes fade and it keeps moving back towards a pause because of what I've talked about in many videos before, where we're looking at that bond and the yield and things just aren't looking right in the US. The market is losing faith in the US bonds and of course the dollar as well. But that is a longer term perspective, as I'll get to with the US dollar. Okay, so for September's meeting, this is a big one as well. Things were looking like a cut and now it's jumped back to a pause, basically no cut. And you can see that happen in the data down below, where the 1 month ago was at 52% here. This is for that cut. And then it jumped to a higher chance that there would be a cut. And now it's starting to fade again. You're seeing this drop off with the chances of a cut in September, even though the July is the next meeting, that is also fading. And where the probabilities are going are back towards the current interest rate. Now, if you start to look out many more months, you can see this trend continue on. And if it remains on hold here, well, that's just going to be even more expenses for the US with those interest payments that, well, the interest is higher because the rate has remained higher. So of course, Trump thinks it needs to come down, but there are other things going on in the background, which I don't think he's taking into account for the overall economy. As you guys know, we've discussed here when it comes to the bonds and the yield. So how does this leave things now for the S&P 500? Well, we've got the reset day here, 8-day on the way up, 8 days, you can see the greens, but we're really looking at no breakdown of the low of the previous day. And that occurred for 8 days in a row. So really strong move. And regarding the probabilities, well, we've only seen this for the second time in 2025. Typically, there's about 3 times each year that we see these long, extensive moves before there is a correction. And well, in the last 24 hours, we've got 1-day correction. Does this go on for any longer like it has done in previous times? Obviously, only the future knows that. But looking at the probabilities, it seems like it could go on for a little bit longer. And that could be that slowdown and the reset. Now, I'll ask you a question for the comment section. How much do you think that small move is worth on the market? I'll go through the numbers in a moment, which will then help you understand Bitcoin and Bitcoin's position in the overall market, looking at the asset market caps overall, so top assets by market cap, and why it's probably unlikely Bitcoin is going to have any sort of extreme move to 1 million plus sort of thing. And I'll go through the maths with you in a moment. But the question is, how much do you think that move is worth if you're holding one contract of the E-mini futures? Just that little move there of 97 ticks. Some of you might already know the answer. Okay, so in terms of the reset, we're at extreme greed again, but it's declining. So extreme greed yesterday at 78, we got the 75. Of course, there was a day down there. I think it might have to do a little bit longer just to give a full reset. Otherwise, we're at risk of running up again into that extreme greed, maybe getting closer to the high there at 63 again, or even breaking the high. But then you run into that problem of the sentiment not having enough time to reset. The put and call options today have risen slightly, so 0.62. Yesterday we're watching it at 0.61. So with more of these indicators still at extreme greed, like we've seen in the past, it could be some time here until we get the full reset of the market sentiment before the market can keep going in a strong fashion, as we've already seen it for 8 days. So here is the answer. Each tick is worth $12.50. A tick is a quarter of a point. So this is just to put things into perspective with the amount of money that sits on the S&P 500, the amount of money that changes hands daily. And I'll tell you that as well, and how Bitcoin really isn't at that standard yet, but it can still be quite early days. So maybe that's a little bit of hopium for the very long-term outlook for BTC. 97 ticks. So it's 97 ticks from that low of yesterday to the current low at one contract. It's $1,212.50. So if you sold at the low of yesterday and then bought back at today's low, yes, because we're going short here, one contract would give you $1,212.50. If you had 10 contracts, that would be $12,000 for that minuscule move, what you would expect in Bitcoin to be quite a very, very small move. That's because each of the contracts are worth so much. Now, if we're looking at how much volume was traded in the S&P 500 on the 7th of July, roughly about $93 billion was traded hands on that day. How much liquid money is there in the world? About 130 trillion if we look at the widest financial assets. So there is a ton of money out there in the world. Yes, a lot of this could go into Bitcoin, but it really doesn't have the space to absorb all of that money. So even if there is a lot of money that ran into Bitcoin and pumped the price right up, it may not last there for too long, because essentially it's trying to buy something that is extremely scarce. And I understand that that's part of the reason why people think that Bitcoin will always go up forever. But if you're holding tens of billions or hundreds of billions of dollars, it would be an absolute silly game to expect the price to remain at those elevated levels if you see this big tulip mania pump. Now, of course, it can keep going, and that's what I think is happening in this cycle, and I'll get to that when it comes to the Bitcoin cycle in just a moment. But like with every single mania in the entire history of financial markets, going back 400 years into the 1600s, when there was the tulip mania in the Netherlands, each of those bubbles bursts. So can we take a cut of those profits? I think we can. That's why we keep going with the game of trading. So as for Bitcoin, it's at $2 trillion. I would not read into the volume too much here at 45 billion, because of course, and also the same deal, the market caps, because it's not necessarily that there are $2 trillion in the market. It's just whatever that last traded price is multiplied by the number of supply there, and the circulating supply, nearly 20 million BTC. Next is the US dollar. We've looked at the stock markets and how that data has been resetting, and also the interest rates. So how does this all tie in with the US dollar in the real estate cycle at the moment, and where does Bitcoin stand on it all? Well, we've seen a base start to form here just on the short term. You can see a few days rally. If Bitcoin can get back above some of these previous lows and close, that could be a good area that it would at least hold out for some time to come back and test that 100 level. It's often believed if the US dollar is falling, then risk assets have an easier time of going up. I've shown on the channel a few times how that's not exactly true, in particular, like this period of the US dollar falling in February and March, and now into this low at April, yet Bitcoin was also going down at that time. And from here, at least the US dollar has continued to fall. Bitcoin has obviously rallied. Now, if we get the inverse here with the US dollar going up, maybe this could be part of Bitcoin stalling out through this summer period. But that, to me, is a short-term outlook, looking at the weeks, maybe even to a few months here, when there is still longer-term downside for the US dollar, longer-term weakness for the US dollar. And I'm using our overbalance in time and price as a particularly strong signal at this point. For clarity, in the second half of the real estate and economic cycle, generally the US dollar finds a lot of weakness. The second half of the real estate cycle was this. That's a huge downtrend for the US dollar. The second half of the real estate cycle in the prior cycle to that was this huge move down for the US dollar. There is the 1990 low, and from there, the US dollar basically found a base, consolidated, and then ran up for the first half of the real estate cycle. It happened again. You got 2008 low, you have the 2009 low, you have the 2011 low, the low here, roughly 2011. And you can see that it consolidated before it started its journey higher. So I think we've now seen that. We've got the first half out of the way, first half of the real estate cycle, US dollar going up. Now we're in that phase of the US dollar going down. Overbalance in time and price is one of the key ways that we track the markets to see whether we're actually getting a macro turn. We can use it on the short term as well, but on the macro, it gives you a nice clear picture. So for the downside, looking at the current trend down, we have 18.75 for a round number, with 34 months from the top to the bottom. Has this extended? Has it exceeded any of the previous corrections on the way up from the low? So that's the starting point there. And this is the previous reference range. There is 16, that's the largest range. So the largest correction down in time and price. You have nearly 17 points top to bottom over 26 months. And if you want a visual, here's a reference range. Copy and paste, put it to the high. And as a visual, if the US dollar had got to 97.7, roughly November 2024, that would be a balanced market. But we have now, as this term suggests, overbalanced in time and price to the downside. So with any of these short-term rallies, maybe they get to 100, maybe they get to the 50% level at around 103, 104, that's through here and here, it would still need to break above those levels and then exceed the tops to invalidate the weakness that has formed on a macro level here for the US dollar. So all in all, things are still tracking as the plan has suggested with the 18-year cycle that we've been tracking now for many, many years on the channel, and personally for my own portfolios from around 2012 when I found out about this. And it seems like we are on track for risk assets to continue doing what they do, at least in the short term here. And of course, the US dollar continuing down until it finds a base. And it will probably find a base when there is going to be a lot of fear around the US dollar and potentially why it won't be the world's reserve currency again. That could be news that we see in the coming years. I'm looking out to the late 2020s, maybe between 2028 to 2032. When people think that it's all over, there is no chance for the US dollar again, that's when I think you're going to see some sort of major base form. And then we do the same thing again, watching the overbalance in time and price to get that flip for the 18-year cycle to begin yet again and heading higher. But there's a long way to go until we get to those points. So if you want to stay up to date, link in the video description for our free reports that are going out today, tomorrow, and Thursday. 3 times a week, Bitcoin report, the economic report, and our altcoin report as well. You'll get the updated ones direct to your email inbox, looking at everything from the economy, obviously, as I said, Bitcoin, and some of those altcoins as well. So that takes us over to Bitcoin and looking at the cycles, as now I've covered what we've been discussing here with the 18-year cycle, the stock market, interest rates, and how I think things are happening leading into this peak. On the short term, 108. The levels, 105, 106 for support. A breakdown of those, then it looks like we head back to those lows of between 98 and 100,000. That's the short term. You guys are here for the longer term. We still have not broken the highs of the 7-year resistance level, but this is the interesting one to me, looking at how the end of the cycle could unfold. Yesterday, we talked about the top, first looking at the top in roughly 21 weeks, coming out to about August, but another more significant one here coming out around November, which would be 32 weeks from the April low. The 32-week reference point comes from the 2013 cycle when Bitcoin corrected 81% in a matter of days from that high to the low, $260 down to $50. So it was 32 weeks from that particular correction into the final top. Through that period, there was a lot of consolidation, accumulation, and then you had this significant blow-off move. It started to break out in October from $150 all the way up to $1,200. So not exactly a 10x, but a pretty significant move into that final stage over the course of about 6 or so weeks. So that's where that 32 number comes from. In terms of the cycles and ending the 4-year cycle and what happens after this 4-year cycle, we're into a right translated cycle now. So the market has been going up for over 2.5 years, to be exact, 137 weeks. To the final peaks, like each other cycle has been roughly about 150, 155 weeks. So into that final top of 32 weeks would give you the 155 weeks, which it has done in each of the prior cycles, 2021, 2017, 2013. So it would be somewhere around that point. We're not looking for exacts, of course. We're just watching timeframes, which is what has happened in the past, and so far continues to repeat almost like clockwork. Now, forget the prices on the side here for a moment. The peak that I'm looking at here, which you might have seen me talk about before, is the correction and then into that next peak, which would be the next 4-year cycle. So we could potentially get a pullback after we see a top in Q4, which has happened in 2021, it happened in 2017, and it happened again in 2013. So Q4 tops are pretty common. Now, if it extends this time, because we have seen quite a big build-up above the old all-time highs, like a pretty solid consolidation, maybe this top, and it's not going to look exact here because I have to move a few of these over, but maybe that top extends out into January or February. So basically, let's call it Q1, sometime into Q4 or Q1, which would then extend this out slightly. Nothing too crazy that would put the cycle completely out of whack, but just enough so that on the correction, so you can see if the market comes, when the market does come down after a significant top, we would end up with something around a Q3 or a Q4 low, but less than a 12-month correction. That's what it has been in the past. You can see 376 days, so 12 months in a couple of weeks. The last one, exactly 1 year, so 12 months. And the one prior to that, this one was about 14 months from the top to that low. So basically 14 months there. So I think it would have to be something less than 12 months. One of Gann's rules there is that if it's less than 12 months, then there is a higher chance that you're going to see a new, fresh high from that point. That's where this could come in. That could be a pretty strong case, and it would have to happen relatively quick and be in the first half of the next cycle. So all that means is you've got the low roughly around Q3, Q4 of 2026, and then that peak would have to happen in the first 2 years. I think it would probably happen in the first 12 to 18 months. And then you would get this multi-year bear market running out into the 2030s, which also lines up with the 18-year cycle with basically everything coming down in that period there into the low of roughly 2029, 2030. Now, the other scenario here is that potentially this top doesn't exceed, but it's a strong enough move that gets everyone back on board after a significant correction. This thing could come all the way back down to 100. We just don't know yet because we don't have the top in. Big correction here, but this rally could be just underneath that all-time high, wherever this all-time high lands, which would obviously rally everyone back in. It's still sometime within the cycle itself leading into the peak of the stock market, because of course real estate may have already peaked by that stage. I think it would have. And then you get this multi-year bear market. So the only difference between those two scenarios is where that second peak comes in. It could look similar to that. 2019. So you had the huge move to the upside. If this was less of a correction and you didn't get the 12 months there, less of a correction, you get this really strong move up, basically pulls everyone back in, and then it just fails and fades out for multiple years. So that's what it could potentially look like running into the next cycle after we saw a top here. So I know it's a little bit to get our head around, and it definitely is because we still don't have multiple data points to work from. Those multiple data points are an end to this current cycle, number one, a low from that correction of the top of this current cycle. That's two. They're the main two. The third one is how high is it going to run? Our 50% level that we can work with from here, and potentially whether we see an overbalance in time and price as well on that pullback. So the two main ones are the next top and the next low to see where this move can go. Lots to worry about in the future, but for now, most of this still seems like it's getting ready for an even bigger move than what we have seen in the prior cycle. So something much bigger than what we saw into that final peak where it ran from 30K to nearly 70K with the consolidation above these all-time highs. Very excited about that because it still is working relatively well here. The US dollar dominance, USDT dominance, I should say, in crypto, still not giving us too much, so we don't have to spend too much time here. It's basically been about 2 months now between 4.4 and 5.2%. So between 4 and 5%, not giving us too much. Still waiting, at least on the shortest term breakdown here of 4.7, then ideally the all-time support line, which continues to grind higher. And then, of course, the low here at 4.4%. And the others chart. So basically your altcoin market is still not doing any sort of signs of running into an altcoin season. It continues to grind here at 7%. If you see a breakdown again of 6.8, probably heading lower over the course of the next several weeks to get somewhere into those low sixes, if not somewhere down to 6%, which means altcoins would continue to bleed out based purely on the charts, as we have not seen any sort of overbalance in time and price. The overbalance, again, if it's going to the upside, is just suggesting that more buyers are stepping in with more money and for a longer period of time. That's what we need to see to flip the trends. Now, there's a full course on overbalance in time and price in TIA Premium. Link to that is in the video description. Otherwise, check out the free reports coming out over the next few days. And let me know in the comment section if you want more info around how the markets work. Often we go through analysis, but if you want a little bit more insight into exactly how they work, like what we did with the S&P 500, looking at these tiny moves as one example today, let me know in the comment section. Otherwise, I'll see you guys back here at the next video. Thanks again, like, subscribe, and have a great day. Cheers.